Last Tuesday, South Korea halted trading, not slowed, halted. Samsung and SK Hynix lost 12% of their value in a single morning. The Nasdaq dropped 2.2% by that afternoon, and within 2 days of sell-off had gone global. And every headline reached for the same 3 words, the bubble's popping. 2 weeks before that, the senior portfolio manager at Acadian, Owen Lamont, published a note titled, quote, "Yet another way to which 2026 is looking like 1999. Wall Street currently expects 20% long-term earnings growth from the S&P. At the peak of the dot-com bubble, that number was 80.6. We are now officially more optimistic than 1999. Congratulations, everyone. And Bill Gurley, Benchmark, one of the greatest venture investors alive, went on record with this. One day, I just think we'll trip and run out of money on those things. We trip trillions of dollars of capex, and the technical term of the industry's sharpest mind for all of this ending is that we tripped. Like the entire global financial system is walking around with untied shoelaces. Nobody decides anything. Nobody sells anything. We're just all strolling along one morning and whoops, there goes $4 trillion into the storm drain. And I say this with love, a venture capitalist warning us when people get rich quick, a whole bunch of people come in wanting to get rich too. Say it ain't so. That is the business model of venture capital, and let's be honest, I would know. That's the arsonist showing up to teach fire safety seminar. He's not wrong. He's just uniquely qualified. So, is this an AI bubble? Well, this is where I'm supposed to pick up a camp, right? A camp 1 is yelling, pop, get out. Camp 2 is yelling, AI is real, so there is no bubble. Well, both camps are being lazy in my opinion. Let me give you the one number that actually matters. In February, the NBER, the National Bureau of Economic Research, the people who officially date recessions, published a study that found 90% of firms report no impact of AI on productivity. None. Measured. Nothing. Meanwhile, the executives at the same firms project AI will boost productivity by 1.4%. That gap between what's measured on the shop floor and what's promised on the earnings call, well, let's be honest, that is the bubble. The stock prices are just the gap wearing the ticker symbol. And here's where the AI is real, so there's no bubble crowd that, they don't want to hear this. A technology can change the world and be a bubble at the same time. Amazing. Those aren't opposites. Historically, they're actually roommates. Quick history lesson. Late 90s, telecom companies raised hundreds of billions of dollars and buried fiber optic cable under every road in America. Way too much of it. The overwhelming majority never lit up. The companies went bankrupt. Investors were annihilated. And then all that dark fiber got bought for pennies on the dollar. And it became the reason streaming video, cloud computing, and the video you are watching right now are economically possible. The bubble was real. The pop was real. The infrastructure won anyway. Maybe there's a lesson in here. The hyperscalers are on track to spend $739 billion on AI infrastructure this year. That's up 78% in 1 year. Some of that will be the dumbest money ever deployed. And 10 years from now, builders will be running businesses on it for pennies on the dollar. Both things, roommates, guys. Now, my favorite receipt on this whole story. Everyone in television says the bubble is popping right now, this quarter. But there's a prediction market on Polymarket. Real people, real money on the line, pricing the odds that the AI bubble actually bursts by the end of 2026. Want to guess the number? Roughly 1 in 5. So, all that screaming? When people have to put actual dollars behind the sentence, they say, probably not this year. You see, even for me, right? I'm just a talking head. Talk is free. Positions are honest. And I trust that number more than any headline because I've traded prediction markets with my own money. I've lost about $400 doing it and published the autopsy. Why am I reading this script? Really? You're going to put that in the script, Mini Doge? You're the one, Mini Doge, who lost me that money. The market does not care about your narrative. That's exactly what makes it useful. Full disclosure on the other side, too. Nobody rings a bell at the top. Lamont himself hedged. Maybe as we look back at today's prices as, quote, another triumph of the efficient market hypothesis. Even the pros are pointing in both directions. If I could time bubbles, I'd be on the boat, not on YouTube. I don't know when, neither does anyone else you're watching today. So, here's the playbook. The pragmatist version. 1. You're only exposed to a bubble if you've bought the bubble. If you own the picks and the shovel stocks at these prices, that's your portfolio decision. I'm not your advisor, but if you're a builder, every overinvested dollar out there is subsidizing your compute. Thank you very much. Frontier Intelligence costs less per month than the gym membership because investors are eating the real cost. Thank you, thank you, thank you. So just say thank you and ship it. Number 2, be the 10%. 90% of firms measure no impact, not because the tools don't work, but because nobody rebuilt their workflows around them. Run it like a scientist. Baseline first, then the tool, then measure the delta every week. If AI isn't measurably making you faster, that's not the bubble's fault. That's an instrumentation problem. Actually, it's really just a you problem. Number 3, if the pop comes, the tools do not uninvent themselves. GPUs get cheaper at the liquidation sale. I did this in Bitcoin mining. Talent shakes loose, the fiber goes dark, and then somebody lights it up for pennies. The bubble is the financing, the capability is the freight. Don't confuse the two, my friends. And don't wait for the pop to start building, because, frankly, I'm building all the time. AI is the way for your own salvation.